Hey everyone, welcome back to Upside Down Data. So in this video, I'm going to talk about the Gaussian Channel for Bitcoin, which is a moving average based indicator that people use to identify macro trends in the market. So if you like the content, subscribe to the channel, give the video a like, follow us on Twitter at Upside Down Data. We put out regular updates there about our risk indicators and more. So let's start by looking at the weekly chart here for Bitcoin. We just closed a new weekly candle, and it's inside the channel. This is the Gaussian channel, that green and occasionally red channel you see there, and we just got to close inside it. A viewer named Matt a couple of weeks ago, thanks for pointing this out, Matt. He noticed that it's historically been a really bearish signal when we see a weekly close inside the Gaussian channel. It's historically signaled that an extended downtrend was likely to continue. And so Matt pointed that out, as I mentioned, after the candle that closed 2 weeks ago. Now, I've been pretty clear in recent videos about my belief that we're still in a macro bull market. The top is not in from my perspective, and I've talked a little bit about why I think so. And so I was feeling pretty smug last Sunday when a bullish engulfing weekly candle that you see right there closed back above the top of the channel. I mean, it's a good thing that I didn't make a video bragging about that, because we just got this next close down back inside the channel. So we had a close down inside the channel 2 weeks ago. Then we had a bullish engulfing candle that closed above it. And then we had a bearish engulfing candle that closed back inside it. And now here we are back inside the channel, starting a new week. So the question is, what's it mean? Well, for starters, as Matt pointed out, it's undeniable that previous weekly closes inside the channel did precede extended periods of significant additional downside. I mean, if we just go back to the late 2017, early 2018 move, we see that after topping, we got this close inside the channel, and then that led into this bear market, and ultimately this final capitulation through the bottom of the channel, another 50% down to 3,200, where the market cycle bottomed. You can see that back in 2013 too, that each time a weekly candle has closed inside the channel, it has led to extended downside. So one thing that is pretty evident from looking at those previous instances is that it only took a couple of weeks for that downside momentum to accelerate. So we got this close, this pretty big candle here back in early 2018, and then the price pretty much just tanked. There was this little bounce up here, but really the price went into this kind of extended decline. It was pretty much down only from the point that the candle closed inside the channel. So, it's been quite bearish in the past, but that also suggests that if history is to repeat, then we shouldn't have to wait too long to see this playing out. So if this is indeed a trigger suggesting that extended downside is coming, then in order for it to mirror these previous times, we would want to see the momentum accelerate to the downside. If the momentum didn't accelerate to the downside, that wouldn't necessarily mean that more downside is not coming, but it would mean that it's not playing out the same way that it has in the past. So we're going to have to wait and see. In a couple of weeks, I think we'll have a pretty good indication of whether or not that's happening. So let's see if Bitcoin dumps significantly within a couple of weeks. That would be confirmation that indeed this is a bearish signal. That could happen. But what I want to suggest is that closing inside the Gaussian channel is not enough to confidently predict that that extended downside is coming. And in fact, there are reasons to be skeptical, I think. Or maybe to put it, a little bit more carefully, closing inside the Gaussian channel isn't enough to convince me on its own that extended downside is coming. It is a data point that we want to take into consideration, but on its own, I would be hesitant to consider it a signal that more downside is coming. There are two reasons for that. There are two things that I think have to be taken into consideration here, and that really kind of raise questions about the reliability of this close inside the Gaussian channel. One of those is just about the nature of the Gaussian channel, in and of itself. it's a lagging indicator. It's basically based on standard deviations of moving averages. And so it's constantly adding new data points to a larger pool of older data points. And so by the time a close in the channel triggers a bearish bias, whatever bearish momentum that close inside the channel is identifying has already been underway for quite some time. So that means that even though it's useful for cutting through a lot of noise and identifying the current trend, it's only useful for predicting the future insofar as the trend is likely to continue. Because it's a lagging indicator, it's telling us what has been happening up to this point. And so that's only going to predict if there's continuation. It's not well suited to being interpreted as a trigger, is what that means. And so, for our bias to flip, we would want something that has a bit more kind of forward-looking information. So we already know that price action has been bearish lately. So, if the price action has bottomed and it's in the process of reversing to the upside, I'm not saying that that is the case, but if that is the case, then the Gaussian channel wouldn't know that yet. So using the Gaussian channel assumes continuation, which is an assumption that needs to be justified with other information. So what I'm pointing out here is that there's an assumption involved in using the Gaussian channel to predict the future, and that assumption is continuation. Because it's a lagging indicator, what it tells us is about the past, and the past only predicts the future if it continues in that same direction. So that's one reason to interpret this with caution, in my opinion. The second major reason to interpret this with caution is something that I've talked about a bit in the past couple of weeks, and in particular in a video that I put out last week on the bull market support band and how the period of the moving average associated with the bull market support band is increasing because of diminished volatility. So this is a really, really key point to understand because it has a ton of implications. Bitcoin's macro volatility is decreasing. That has a lot of mathematical implications. The one that is relevant here is that bull market extensions above moving averages are decreasing. We can demonstrate this objectively, but you really don't even need to. I think it's fairly obvious given this kind of rounded top that we had back in April. We just didn't get the same level of extension. We didn't have a blow off top to the upside. And, that's really important because what that means is that when the price revisits the top of the Gaussian channel, it's doing so with a lot less downside momentum. It's a simple principle. What goes up must come down, but what goes up less can come down less. And so what I'm saying is that this weekly close inside the Gaussian channel represents the first time in Bitcoin's history that the price has returned to the top of the channel at a gradual pace without free falling into it. And so the dynamics of this move and this close back inside the channel are very different from previous ones. Back in early 2018, we had just seen this blow off top, at the end of December 2017, and that led into this monstrous decline. I mean, look at the pace of this move. It came down very, very fast. It came down so fast that there was this significant bounce up, followed by additional decline that lasted a year and caused a lot of pain. We're just not seeing those same dynamics on the chart. And so the fact that we've closed back inside the channel is potentially just more, natural variation in the price, just moving around within a range rather than recovering from a blow off top and correcting from a move that was really unsustainable. So what I take from looking at the Gaussian channel is that when it comes to Bitcoin, we should expect the unprecedented. If we extrapolate from what Bitcoin has done in the past, then we're bound to come up with some unreliable expectations because we only have a few data points, at least as far as market cycles go. It feels like we should be able to rely on these past data points because it's all we have. And so a lot of times when we're doing technical analysis, it makes sense to look back at past occurrences because that's the most relevant information that we have. But at the same time, there's no way around the fact that 2 or 3 data points is really hardly better than having 0 data points. And not only that, but because volatility is decreasing, even the 2 or 3 data points that we do have, and even if they were to repeat themselves, under identical conditions in the past, meaning even if what we see having happened in the past really means something about the past, as opposed to having been the result of freak accidents and chance events that wouldn't repeat themselves. But even if those are really reliable past events, because volatility is decreasing, they don't necessarily tell us much about the future. So conditions are ever changing for Bitcoin at this early stage in its history. And they're going to continue to do that with volatility diminishing. And so it's really important to avoid assuming that something that has always happened or never happened must or must not happen again. When it comes to Bitcoin, expect the unprecedented. That's what I take from looking at the Gaussian channel. We'll keep an eye on this because it'll be interesting to see whether there is downside that continues. And if so, then maybe we'll reassess. We don't want to be deterministic here. All I'm saying is that in and of itself, there are reasons to be skeptical that a trigger interpretation of the Gaussian channel as being the beginning of a bear market is reliable. So that's all for now. Hope you guys found this useful. See you next time.